Hey John, thanks for emailing in. This is Ryan with trendlizard.com. I'm going to do an analysis of MOO, the Market Vectors Agribusiness ETF that you emailed to me. Let's take a close look because there's a lot going on with this guy. It's really interesting, actually. You basically have to go back to its inception in 2007 to get the full perspective of what's going on, and there are a lot of tradable signals that it has left behind depending on what time frame you are trading. So let's just dig in and see what's going on. So here's the inception of MOO back in 2007. Started off okay, tanked in 2008 along with the rest of the market. Since then, it's all been pretty constructive. You can see off the 2008 low into the 2011 high, it gave us a big trendy five-wave advance. Since then, it's been one big corrective mess sideways. So this is bullish stuff. I mean, you have the trendy patterns happening to the upside, counter trend patterns happening to the downside. The only thing that can mean is that the long-term uptrend is up. However, it's probably not ready to resume its uptrend quite yet. It looks like this big sideways pattern that's been in place since 2011 is not yet complete. Things have turned a little bit more down in 2015, as you can see here. And if we zoom in, we can see that there really is a pretty good setup for the weakness to continue back into this yellow area here. So let's go ahead and zoom in. This is the 2015 decline. I have a ton of labels on this thing, which basically is just showing that it is a really trendy decline, which is a good sign that this guy is heading lower in the midterm from here. So it looks like the 2015 down leg is over into September's low. There's a recovery underway right now that's not yet complete. It's likely to continue into this yellow area here. We would expect it to end somewhere below 53, at which point the overall decline is going to resume. So from a trading perspective, I think you need to be bearish in the midterm here. It's actually not a bad shorting opportunity once you get one more leg up that heads into this yellow area somewhere. Once it turns back down, this is a shorting opportunity. You can put your stop at 53 and look for a pretty big down leg. If we go back out to that long-term chart, what we're looking for here is a down move that carries back into this yellow area. A decent target is somewhere around 37.50, which is where the 2011 low was. Once it gets there, there's a really good chance that the trend will resume, the long-term uptrend. In the meantime, there's just a lot going on to the downside that it does indeed look like a pretty good shorting opportunity. So again, I would think you could put a short position on this guy after the current recovery off September's low completes, and look for a pretty big decline back down into this yellow area before the overall uptrend resumes. So I hope that was helpful, John. Thanks for being part of the Trend Lizard community, and we will talk to you soon.